Why haven't you gotten your ERTC, the Employee Retention Tax Credit? Because if you have employees and you got PPP, then how are you not qualifying for ERTC? In my opinion, there's more employers that are going to qualify for that than have applied. In essence, it's unlimited. And even though the program ended, hear me on this, yes, the program ended September 30, but unlike the EIDL and unlike PPP, all that means is that after September 30 of 21, wages paid after then don't qualify for ERTC, but the Employee Retention Tax Credit is alive and well for wages and employer-paid health insurance that you paid on March 13th of 2020, all the way back to that point. You can still get this credit. And I want to explain the credit to you in a second, but qualified wages from that date all the way through September 30 of 2021, you are able to go back and get this credit. You get it by filing Form 941X. I'm going to give you a link to a playlist where I talk about this as well as the Form 941X. I have a seminar I'm going to give you a link to that you can get instant access to, where I walk you through A to Z on how to determine if you qualify for the credit, which you can determine by watching my free videos. But A to Z then on how to go about it, what wages, how to include them, how to calculate it, and how to get this money. The thing is that it does require a little bit of work. But how much work would you put in as a business owner that has employees that you pay W-2 wages? How much work would you put in to get $7,000, $10,000, $20,000, $400,000? This adds up quickly. How? Because in 2020, this is 50% of qualified wages, $10,000 max per employee for the year. In 21, per quarter for first, second, and third quarter, fourth quarter if you're a recovery startup business. But for the calculation in 2021, are you ready for this? If you're 500 or less employees, that's a lot of different employers that are 500 or less employees. The entire quarter, 70% of wages to your employees, now again, $10,000 max per employee per quarter, but that's $7,000 potential credit per quarter in 21. So that's a potential credit of $7,000 per employee in quarter one, quarter two, quarter three, and $5,000 last year. Together, that's $26,000 in tax credit for one employee, assuming that they are being paid at least $10,000 during those qualified periods. How do you qualify? Well, if your gross receipts are down in 21 compared to 2019 for the quarter by at least 20%, you qualify. They have an alternative method that, let's say your gross receipts aren't down for that quarter in 21 compared to quarter 19 that correlates to it. Well, was the prior quarter compared to the same quarter in 19 down at least 20%? Boom, you then qualify. In 2019, that is what you're using to determine your head count of the type of employer you are, 100 or less in 20 or 500 or less in 21. And 2019 is your base of gross receipts that you're comparing to when you're determining if you're down in 2020 and determining if you're down in 21. A lot easier to be down in 21 or 20 when we're talking about 2019 it being compared to, because that was all pre-pandemic. When I talk about the credit, I told you, here's the credit. It's money in your pocket. Many think the credit is some kind of reduction of tax and maybe it's not refundable. This is fully refundable. So you've already filed the 941. And if you haven't claimed this credit, when you file a 941X, you will get a check from the IRS, literally. Now there is a catch to it, and it's not a reason not to do this. The catch is this, that whatever your tax credit is, you do need to reduce down the wages that were deducted in that period of time or that calendar year that were used to get you that tax credit. Is your head swirling? Don't worry about it, because you can go to my playlist and figure this out. It's all free videos. And then if you really feel like, hey, I think I qualify for this, you can take my seminar. You get instant access. It's $197. If you qualify for this, there's no way you don't get like a ton more. What I'm trying to get at is this is money that is on the table. It's being left there. Why are you leaving it there? You got your PPP. You got your EIDL. How are you not qualifying for the ERTC? Maybe you don't, maybe you do, but are you leaving $10,000, $20,000, $50,000, $1 million literally on the table? You need to figure this out. Last thing I'm going to say to you is this. If you already asked your tax advisor and they said no, with all due respect to my fellow tax advisors, I'm a CPA, I'm a tax advisor, I'm in the trenches, but there's a lot of tax advisors that aren't fully aware of this. They haven't either educated themselves or more to defend them. They're not involved in your payroll. They don't do payroll. And so they think this is nothing more than something related to payroll and they don't need to mess with it. And why am I telling you all that? Many advisors are telling their clients, due to that advisor's ignorance, with all due respect, no, you don't qualify for that. Because they think that you had to be shut down by the government and have your gross receipts down. It's one or the other. It's not so much that the advisors are lazy. Well, I don't know. Be honest with you. Come on, what, you're an advisor? How are you not helping your client with this? But nonetheless, if you've been told you don't qualify, don't just start walking to the bench. Okay? You're still at home plate. You still got a bat in your hands and the ball's still coming towards you. And the reason I say that is ask your advisor, well, why don't I qualify? You're not challenging them. This is what they're there to do. Why don't I qualify? And I will tell you this, many times that I've put this in videos, people have come back and commented to me or emailed me that they then actually went back to their advisor and said, hey, you told me I didn't qualify, but could you tell me why? And guess what? When the advisor was then actually put on the spot or asked to spend a little bit more time on it, they then determined that they do qualify. One of them got $415,000 back each quarter. Okay, we're talking more than 1.2 mil for just going back and asking the question. You're right, I'm a little hyper about this. I'm a little worked up about it. And you know why? Because it's just getting missed. A billion and billion and billion, add them up, dollars will not be paid out on this because people are just looking the other way. Or advisors are saying it's not my responsibility. What you need to do is take the bull by the horns, figure this out. I'm going to also just mention, okay, I'm not a fan of you paying a percentage of your credit for someone to prepare this. And I'll tell you why. It is not that hard. You're right. You can look at a 941X and go, wow, that looks pretty difficult. Guess what? It ain't, okay? In the sense of if you're getting a $100,000 credit and someone's charging you 20% and you're going to pay them 20 grand, that is not how this works, okay? Someone, in my opinion, that's doing you right as an advisor will charge you for their time, and they should charge you for their time, and it may be a pretty penny that you have to pay, but it should not be a percentage, ever. I've never charged my client a percentage of whatever it is that I'm doing for them. And the biggest reason why is that CPAs can't do that. So don't do that. Don't look at it as, well, it's 100 grand I wouldn't have got otherwise, so why not pay 20? Are you kidding me? Don't look at it that way, okay? Don't be that person that leaves this on the table. And if you find it on the table and you want to grab it, don't be that person. Don't be that business owner that pays 20 grand to get 100 grand when in reality, the amount of time that they would have put into that, if they charge you for it, might have only been 5 grand. So thanks for tuning in. And then don't you ever forget, you've never met a CPA quite like me. Have a great one and go get this money. Get your check. Okay, that's what it's there for. All right, hey, I'm out.